Welcome to The Edge, and Paige St. John from the Herald Tribune and Richard Greene from Southwest Insurance Associates. Nice to have you here. I'd like you to start, Paige, with a little bio on your background.
Sure. I'm an investigative reporter at the Herald Tribune. I've been at the newspaper for 2 years and worked almost entirely in that period on investigating the property insurance market.
The Herald Tribune has hired you for 2 solid years?
Yes.
And that's the only reporting you've done?
Yes. It's a critical issue and difficult one to get your teeth in.
Is that taking easy money, or?
We're one of the few newspapers in the nation that still have a fully stocked investigative team, so I'm very lucky to be on board.
Well, we're lucky to have you here.
Thank you.
Sounds like. Richard?
I've been an insurance agent for 36 years. My grandfather started our agency in 1902. My father came in 46, and I've been in since 74. I do general insurance, property insurance here in Florida, and I've seen quite a change.
So are you the villain or the friend?
I'm the friend of the consumer.
They're out there watching.
And I also do a good job for my insurance companies. Both sides.
Well, you've written a provocative article, and the insurance pain that we're about to incur based on some re-rating that's going to affect the center of the state all the way up into the states of Georgia, Alabama, and Mississippi, North Carolina, South Carolina, Virginia, all the way up the coastline. They're going to be affected by these increases. And ironically, the Keys, Longville Key, the exception, is going to get hit with a 100% increase, supposedly based on this RMS. It's called Risk Management Solutions that they've come up with this formula. And Siesta Key gets a 50% kick up, or hiccup. And the long and the short of it, it's looking scary for the public. Why are these insurance companies acting like brokers, money dealers? What's the meaning of insurance today? And what is the CAT fund?
A lot of questions. Mm-hmm. The model that you're talking about, which will be released in February, is the insurance industry's new definition of where hurricane risk exists, and they're pushing the battle line essentially deep inland, so that Orlando and Lakeland and areas before that thought they were inland and shouldn't feel the pain of hurricane and insurance premiums are now going to wake up with a rate hike, and this new perception of what is hurricane risk. It is actually going down a little bit in some very coastal areas in Florida because of this new perception that hurricane winds don't decay and they remain strong far inland. But the result is that the insurance industry is going to regather yet again, and companies are going to yet again decide where they will and will not write policies, what homes they no longer want to insure, and Rick can share some recent bad news on that front.
They're going to cherry pick.
It is cherry picking. It's in full blossom.
Right, and the tree is in full blossom. Yeah. Aside from that, Rich, the issue in our pre-conversation before the show was about reinsurers. And they're manipulating the pricing for the sake of Wall Street at the rates of, as was mentioned by Paige, a 500% increase in profits to themselves. It's called gouging. Is that really insurance?
Well, insurance is a business like any other business.
Well, so is extortion.
I think that originally the idea of insurance was to spread risk and make it available so that people could operate their lives with less anxiety.
Right.
And insurance has left that field behind, and now they're focusing more on profit. And in Florida, they're able to get the profit because they are able to.
So are they going to kill the goose with that laid the golden egg?
Well, we hope not. But
what would be your surmise based on this situation?
I think that insurance is not only going to become more expensive in the state, and it's also going to become less available. And
so
I think there's ways that the state could handle this that could change that direction.
But you've got an insurance governor
to
now in place.
And he's a business governor, not necessarily a consumer governor.
And of course, his history isn't the greatest because his company got sued for almost $2 billion in fines for Medicare fraud. Then he took the fifth 75 times in the questioning in the grand jury over all of that.
But this issue, he will quickly find, as everyone else will, and they saw in 2006, this issue hits consumers so painfully and so directly. It's an issue that arrives in their mailbox at home and motivates them. And we saw just a tremendous grassroots effort in 2006. It led to Charlie Crist's election as governor. And there is only so much that people can do before waking the beast again. And
So the beast
with
is about to be...
the rate hikes that are being approved now in these last several months, I think you're going to see an outswell of anger. Upswell.
So you have a manipulation through the reinsurers. And where are these reinsurers located?
The reinsurers, there's none of them in the United States that I'm aware of.
They're all
There
offshore?
are a few, but the vast majority
Offshore.
are in Bermuda and some in London, right?
Switzerland,
In
Germany.
Switzerland,
So
Germany,
the only thing they
Cayman
look at
Islands.
is what
and
Wall Street looks at, the bottom line.
Exactly.
They answer directly to their investors, and their investors are Wall Street firms and the very same individuals who are engaged in subprime banking, subprime mortgage.
So here you have a state heavily affected by foreclosures, heavily affected by the subprime, with their entire realty market in doubt, faced with, on top of everything else, something like this. This has got to be a disastrous event to fall on people.
Well, we're hopeful, but it's a scary future, the way it's playing out.
I mean, it's going to come. When are most of these policy notices are going to come? At what point in this coming year?
Well, Citizens Insurance, for example, just took about a 10% increase.
And that's going to come
year.
to people right now, or
right now this
right
year?
now
Yeah.
It's here.
2011.
It's here. When I do premium quotations, if I quoted them in December, we have to redo them for January because the rates have changed.
And
So the
State Farm policyholders, if they had mitigation discounts, if they had shutters, they face, just weeks ago, a 21% rate hike on average was approved for those homeowners.
So the guy that wants to sell and move out of Florida and sell his house for what might have been a profit is now facing a customer view that says, I ain't touching that. I can't get insurance for that.
And it's definitely going to affect the real estate field more than
Which
it
is
has.
already down.
Right.
It will affect
So
it.
it's going to drive values down.
gonna-
We've heard from people saying it is impairing the recovery in some regions of the state. And at this point, it's probably sporadic, but it is definitely an economic deterrent.
Well, you have the additional problem of if you're doing a mortgage, the banks require insurance.
Well, the banks can secure insurance to cover their loans. However, the homeowner, property owner, wants to cover their whole investment. And there's sometimes a difference between the two. If a bank gets insurance for you by forcing, it's called forced placed insurance, it's going to be quite expensive compared to what you should be able to get in the marketplace.
So
but it's still not going
ironically,
to be cheap.
because of insurance, a person who's on the margins now, because of this kind of circumstance, could be forced into foreclosure, conceivably.
Conceivably, yes.
Yeah.
And I'm sure it has happened.
Yeah.
So you
No question about it.
believe that's likely to be the case?
I have people call me up and they say, we can't afford the quote that you're giving us for insurance. And a lot of times we can cut out some things or increase deductibles or eliminate certain coverages and make a policy somewhat affordable. But as a general rule, every time you cut away a piece of coverage, that's something that people might need at the time of disaster.
The long-term effect of this is that it pushes people and hurricane risk onto the public platter. I mean, it can be post-disaster funding through FEMA.
What do you mean by the public platter?
In other words, all of us will pay. If
So it's going to spread the
there's
risk in
not,
that manner?
It's going to take it off of insurance companies who don't want it anyway, and either post-disaster funding like FEMA and emergency grants and big disasters like the bailout of New Orleans, or pre-disaster funding through programs like the Florida Cat Fund.
What is that?
And the Florida Cat Fund is essentially a state pool of money that covers that first layer of hurricane loss for an insurance company. It it was increased tremendously under Governor Christ and is being now dialed back so that private reinsurers can have more leverage in Florida. But it covers probably a third of the hurricane risk in the state at this point, but not for profit. So they only charge in the fund what the state has a potential of losing.
So there you have something approximating.
It's the rainy day fund for right.
When you say spreading the risk for the public, the Citizens Insurance already does that.
Right.
They're the largest insurer in the state, and everybody that buys insurance in the state, regardless of whether they have Citizens or any other company, part of your premium goes to Citizens Insurance out of your policy. Car insurance,
So all premiums,
commercial insurance,
Insurance premium.
that way.
house insurance, no matter what company you're with, you're paying some money into Citizens to support their rates. And of course,
But
if
that's a
there's
not-for-profit corporation? Is that what you're saying?
Right, that is, well, both are. The CAT fund and Citizens are. And which gives them tremendous advantage over the private market, the private reinsurers, and private insurance companies who
This
view them as
governor
competition
talked
and
about
are very
getting
hostile.
government out of the business of insurance and everything else.
Right, and
So-
and the reinsurance industry would have him decrease the CAT fund, and the private insurance industry would have him raise rates in Citizens to make it less
So
competitive.
essentially, he's
Yeah.
removing the reserve, the protections, in the case of a calamity,
Well,
if he goes along with this.
with the CAT fund, right? Yeah.
I mean, this is what happened in 1985 or 84 when the S&Ls had their reserves depleted and cut in half by President Reagan, who said, spend this money any way you like. And so they started building buildings all over, and they were all guaranteed by the federal government. Then that all fell apart. The government picked up the tab. The final debt to the country was $500 billion. So the losses get increased when this is handled privately, which is what you're saying this is going to be done here. There's private reinsurers are waiting like hungry wolves out there to make more money off of a diminishing population. I mean, as people flee this to get out from under this, they're either going to go bankrupt and rent or whatever, but not own.
well, we're hoping they don't flee. We're hoping that the situation changes for the better.
And it can only get so bad before it hurts segments of the state that demand that there be change. I mean, in 2006, the banking community went to Tallahassee and went to Governor Bush and said, we need help. This is killing us, and it is killing home sales in Florida. So they put pressure behind the scenes for even then our free market governor to find a solution that was a socialization of the programs.
A socialization.
It's socialization of the
So
risk
it's-
and privatization of the profit. So that's
so federal, state socialism
yeah.
under the Republican Party and the
Well,
mantle. Wow.
it's surprising, but Bush was a supporter and lobbying intensely behind the scenes, his brother in Washington, other Republican governors, to expand federal emergency disaster funds that would fill this gap. And without success, the Bush White House had no interest in supporting this. And then another Republican governor came in and picked up the baton, and that being Charlie Crist, and expanded the state's own social program, and took a beating for it in his own party.
So without getting into politics, that might have something to do with when he gave up on the Republican Party, became an independent.
There is some talk of nationalizing a lot of different types of insurance throughout the country, besides like earthquake out in California, forest fire insurance, windstorm insurance, expanding it just as a national program as opposed to a state program. So these are socialization programs.
Exactly.
That, some people are for, some people are against.